makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Treasury Secretary Scott Bessent has dismissed the possibility that Chinese investments in the U.S. could be part of any trade pact. Now, asked if China could make similar billion-dollar pledges like Japan, South Korea, and the EU as part of their trade agreements, Bessent said critical industries needed to be, quote, reshored away from China. Now, he did not specify whether those industries were semiconductors or pharmaceuticals, but it does come after Donald Trump announced another 90-day pause on Chinese tariffs. Well, let's bring in Ross Matheson, our chief Asia correspondent. Ross, thank you for joining us. I mean, there's a lot of talk, of course, on tariffs. What did we learn about how Scott Bessent sees the world when it comes to China?
Well, it's interesting to see this development because obviously a big part of a lot of these trade frameworks have been pledges by companies and by countries to invest in the US, to bring in factories, but also to invest in sectors like energy and infrastructure. And that's been something that's helped some of these countries write the ledger, at least, in Donald Trump's eyes. But Scott Bessent making clear that for China, pledging investment's not going to be part of the equation. And that's really because this reshoring effort is about narrowing supply chains, giving the US greater control of supply chains, and particularly in sensitive areas. And so they don't want Chinese investment coming in those sectors because this is all about getting China out of those supply chains and getting greater US control. So it's unsurprising in some ways to see this, but obviously that narrows the options for China. You can see that Bessent and Donald Trump, they've been talking about they still want to see more action from China. This perceived question around fentanyl and chemical supplies coming in to the US that are being used to make drugs. And also they want yet more action on rare earths. Donald Trump has extended this trade truce, but it's still a little bit tenuous, and there are fewer options in a way for China in all of this. And Scott Bessent was just making that very clear.
Ross, can you give us a sense of how much revenue we think the U.S. is getting in right now? I know we have a great story saying, look, the U.S. July tariff revenue has increased, but it still failed to halt a wider budget gap. I mean, can we understand whether the Trump administration wants to increase tariffs really as a move of just even financing and funding, for example, the Big Beautiful Bill, and whether they're succeeding in that?
Well, that's right, because Donald Trump's message was we're going to get all this extra tariff revenue, as he calls it, custom revenue coming in, and that's going to really help them when it comes to the budget deficit. And so there was a better figure in July. It was up 270%-ish over the prior year. It was $28 billion, and certainly it's going in the right direction. But the problem, as you say, is the budget deficit is not going in the right direction for a variety of factors. One is just the amount of interest they've got to service on their debt. They've also got a lot of challenges for the deficit when it comes to Medicaid and other social programs. And this revenue, in the end, it's not a massive amount. It sounds a lot, $28 billion, but it's still a bit of a drop in the ocean when it comes to the broader budget deficit. And it's never really going to replace everything else on the cost side that is blowing out this deficit. And as you say, Donald Trump's Big Beautiful Bill recently passed, coming into force. There are a lot of concerns, obviously, amongst economists and bankers that that's only going to further blow out the budget deficit. I mean, that was Elon Musk's big criticism of it. For all of the efforts to cut spending and to help improve things, this bill doesn't do that. And so this increase in trade revenue, what do you want to call it, tariff revenue or customs money, it's not going to do what Donald Trump said. And that's, you know, for him, possibly a bit of a difficult one to square as time goes on.
And Ross, finally, I mean, we know that Donald Trump is upset with Goldman Sachs and the chief executive. Unclear whether this is because of a bank that the chief economist wrote talking about, you know, the sweeping tariff agenda and what that would do to inflation. But this is, again, unprecedented.
Well, he's certainly got form when it comes to criticising various big banks. He's done that quite a bit. He's accused some banks of debanking clients for political reasons. Now he's coming for Goldman Sachs over what he says is their commentary on trade. It's a bit unclear exactly what that was, but Goldman Sachs has written a note, a research note, where they were warning that the impact on consumers absorbing the costs of higher tariffs is still yet to be really felt. And a lot of economists have said similar, because the real tariff rate is only going up. And as these trade deals or frameworks are stacking up, that's only going to increase. So there will probably be more of an impact as time goes on. Goldman Sachs was pointing that out And that seems to have irritated Donald Trump, and of course holding fire then on social media against Goldman Sachs. But equally at the same time, he's just recently had talks with Goldman Sachs of being part of the business for any IPO for some of these big housing giants, these mortgage giants in the US. And so he probably does need them in the tent. It's unclear if this impacts the broader Goldman relationship, but certainly it's just yet another example of Donald Trump criticising big banks in America.
Ros, thank you so much. Ros Matheson there, of course, covering all of the tariff and Bessent news. Now, yesterday's inflation report bolstering the case for traders betting that the Fed will soon cut interest rates, with some seeing an increased possibility of an outsized reduction. Joining us now, Nannette Hechler-Fayd'Herbe, a Lombard Chief Investment Officer for EMEA at Lombard Odier. Nannette, as always, thank you for being with us. How do you see the reading yesterday? Because I know there's also a call for a 50 basis point cut, but when you also have the Treasury Secretary actually trying to get in there, I mean, the pressure is really on.
It is, but I have to say the following. Yesterday's headline CPI was obviously cheered by equity markets and just simply by financial markets, thereby perhaps getting ahead of themselves with 50 basis points possibility in September by way of rate cuts. But I have been concerned to see that services inflation actually was not headed the right way. And if you are taking away energy prices, it is really services that will matter, because the goods inflation is only going to come through. I'm afraid that right now goods inflation is reflective of an effective tariff rate of 9%. And this effective tariff rate by the United States is going to jump to 16% over the coming months. So I think that it's too premature to think about a realistic possibility of a 50 basis points cut, and our base case remains a 25 basis points cut in September.
What happens after the 25 basis point cut? Is there a danger that actually inflation then shoots up? I know there's also this worry about stagflation. I don't know whether it's now too late to actually do something concrete about it.
Well, I do think that after the first rate cut, there is going to be an increased focus on the real economy in the United States. There as well, some delay of the impacts by tariffs on the real economic activity. The labor market report will be absolutely critical at the beginning of September. And I am expecting that further rate cuts will come around because of the slowdown of the real economic activity in the U.S. 25 at each of the FOMC sessions by the end of the year.
Nannette, what's your take on earnings season? Again, how do they get impacted by what the Fed does next?
Earnings season has been overall good. We have had certainly a few sectors that were really driving the very good numbers. IT is one of them, communication services, but also financials. But then there have been less buoyant numbers on a whole range of other sectors. So my anticipation is that Q3 numbers are not going to be quite as good as the second quarter. But generally speaking, I think that investors will still focus on this is not going to be a recession here. We are going to have only a cyclical slowdown. And generally speaking, we are still having rate cuts that are helping equity markets to continue grinding up.
Is there a point in that when actually there's concern that markets face a correction? Or at the moment, do they just go up and up?
I think there's a bit of complacency, Francine. And so we cannot exclude that further negative macroeconomic surprises might actually give a little bit of a damper to sentiment, which has been, normalizing in the recent months. Is not as expected if we look at some of these tactical sentiment indicators. But I think that investors should really, at this moment, not get ahead of themselves either. It's an okay environment, but we ought to be expecting a little bit more of just negative news ahead.
Nannette, when you look at, some of the, I think a lot of economists and also maybe a lot of investors were expecting, as you say, things to go a certain way. Is this because the economy is more resilient? Is it because inflation takes time? Or where do you see the biggest concerns longer term that maybe market are ignoring right now?
Well, I think there is this point about delayed effects. So some of these are only going to come through over the next quarter, whether it's on the real economy or whether it's on CPI. But generally speaking, I'm comforted by the fact that long-term inflation expectations have been extraordinarily stable. 10-year break-even inflation rates in the U.S. around this 2.3 level, all unchanged. And I do expect that real yields in the United States are going to continue coming down. That is helpful for also risk assets. So altogether, I think that these are the things that will matter, especially when you take account of U.S. valuations in equities, which are remaining quite full.
Nannette, I know there's a number of stories today with AI, some of the valuations, but also maybe a little bit of M&A. How do you deal with tech stocks and AI right now?
Well, we continue to hold this positive view on technology. It's nearly a structural theme, Francine, rethinking how the global society is using technology in their everyday lives is going to just permeate through all sectors of economic activity. I think that theme is just going to continue driving very good earnings and also returns in the sector. We continue to be positive on it.
Nannette, thank you, as always, for joining us. Nannette Hechler-Fayd'Herbe, Chief Investment Officer for EMEA at Lombard Odier. Coming up, CoreWeave disappoints as the tech company comes under pressure to keep up with the rapid AI expansion. We'll bring you that story next, and this is Bloomberg. Cloud computing company CoreWeave has delivered a disappointing earnings outlook reflecting margin pressures from a rapid AI data center expansion. Well, joining us now is our very own Tom McKenzie. Tom, thank you for joining us. I mean, is there a worry about what they will deliver, or is it just that they're disappointing investors because we were expecting so much from CoreWeave?
In March. The stock has performed very well. This is an AI darling, but the stock did drop yesterday 10%. And that really reflected some of those expectations, those stretched expectations, some might argue, but also the fact that on one of the key lines that came through from the earnings was the losses, and losses coming in much higher than the estimates, increasing about 40% in the quarter. They did actually beat top line in the quarter. They raised their forecast, but the losses came in much higher than the estimates as they spent on things like acquisitions and they spent on building out data centers. This is a company that actually build the physical data centers that partner with the likes of OpenAI and Microsoft, on which they then build and then use their models. So their key clients continue to be there for them. And I think the silver lining for this company is that they still have a backlog of about $30 billion US, but there's a cost, of course, to providing and supporting that backlog, and that's the build outs that's needed to kind of work through that backlog. So that will be supportive for them. The demand is still there, but there's a cost to that, and analysts and investors just taking note of that yesterday.
Tom, what can you tell us about this monster bid from Perplexity trying to get Chrome from Google?
Well, it's bold, it's audacious. Perplexity is obviously a minnow compared to Alphabet, but they clearly have the ambition. They've been nipping at the heels in terms of the search market and trying to carve out some of that away from Google. This is an AI search company, Perplexity, making this $35 billion or thereabouts bid for Chrome, making it official on Tuesday. Some of the analysts have come out and said this is well below the actual value of Chrome. Some analysts have suggested the value should be around $100 billion. Perplexity itself is valued at about $18 billion. It said it would fund this with other investors, but it speaks to the ambitions of Perplexity AI, and it's a reminder as well that Google and Alphabet are under pressure after this ruling by a US judge that they have pursued these monopolistic practices and antitrust ruling that they need to break up the business. And part of that solution may be spinning off Chrome, and Perplexity have put their bid in.
Tom, thank you so much. Tom McKenzie there with the very latest on some of the AI stocks. The next edition of Bloomberg Tech Europe with Tom airs this week. That's at 6:30 a.m. London time on Friday. Now, stocks climbing to a record after the latest U.S. CPI report showing the cost of tariff-exposed goods did not rise as much as feared. The reading bolstering bets on outsized rate cut from the Fed next month. Joining us now, Jane Foley, head of FX strategy at Rabobank, and Mikhail Msikar, equity market senior strategist for EMEA. So we have everything covered, equities and the dollar. What's happening to the dollar, Jane? What will happen?
Well, we did see that move yesterday on the CPIs. The market thought, yeah, you know what, there's nothing in that CPI that can potentially prevent the Fed from easing in September. But, you know, the CPI debate is going to carry on. I mean, it could still be quite early days for coming to the conclusion that we're not going to see a big tariff bump in inflation. So that debate is going to persist. Yeah. But, you know, assuming we do get that interest rate cut from the Fed in September, you know, we are going to move on into next year. And, of course, sort of clouding the view, if you like, on inflation is there going to be politics? Is there going to be partisan politics, particularly at the Fed as we move into 2026? And if we do see that, then we probably have a more dovish Fed and potentially a weaker dollar too. But you know, I think this has been an interesting couple of weeks for the dollar. We saw that short covering position a week or two ago, and I think that has been a healthy move. It's cleared out a lot of stretched positions, a lot of stretched shorts in the dollar. But, you know, I still think we can get to 120 in euro dollar, but not until maybe next spring.
Jane, does it make a material difference to dollar if we have 50 or 25 in September?
I think it will, because I think everyone's going to be talking more about, is this more of a political
emergence
move? You know, and we had Bessent obviously last night calling for, 50. But, you know, many economists will say, no, you know, the Fed actually could wait and take stock. And, you know, some economists saying, well, look, you know, there might be fiscal stimulus on the way because of tax measures from Trump. So from that point of view, you know, there is enough arguments either way to argue that the Fed should be in sort of Powell's camp and should be, a little bit more careful. Equally, you know, you can look at the labour data and say, yeah, you know, they're a little bit behind the curve. They definitely need to go 25. But I do think it's pushing it to say that they need to cut rates aggressively from this point.
I feel like it's incredible how we're normalizing, right? The Treasury Secretary weighing in actually on monetary policy is quite incredible. Mikhail, I mean, meanwhile, equities are like having a party.
Yes, Francine, they're having a party, but at the moment, nothing says that it's not justified. I mean, the earnings season was very good. The economy is still holding up. The Fed is under pressure to cut rate, as we just discussed. I don't see a reason why they would cut like very aggressively, because the economy doesn't need it. And even if inflation is still stable and tariff hasn't fed into the numbers yet, or maybe they won't, then, you know, it's still going to cut rate because they don't need to be that high. Yeah. So overall, investors, you know, are responding. Positioning is still low on U.S. stocks. I mean, if you look at the Bank of America Fund Manager survey that was published this week, investors are still like underweight U.S. equities. You can see discretionary investors are still very neutral position on U.S. equities. So there is room there again.
Jane, I mean, there's so much to ask you about, because the ECB, I mean, you actually think that they've completed their easing policy. I mean, they seem to have, like, if they locked it and done, they're in a better place than all other central banks.
I mean, that's our central view, but obviously this is an evolving situation, particularly given the threat from tariffs. You know, the German economy has still got a very stagnationary tone. I mean, if you look at the Bloomberg forecast for German growth this year, I think it's around about 0.2%, so pretty low. And, you know, some economists are saying, look, you know, the impact from tariffs, they could potentially push Germany into recession. Not our central view, but, you know, that risk is out there. So from that point of view, that there is the possibility that if they do anything, it could be moving again. But for now, we think that they're quite happy to hold steady, you know, and see what the economy brings, see what comes through from the tariffs into the economies.
What happens with sterling? I mean, we had a pretty stunning second vote actually last week for the Bank of England, and so it just feels like the MPC is much more uncertain.
they are much more uncertain. And who can blame them? Because, look at even the inflation data that we've had this week. It's still above that level. Look at the wage inflation that we had yesterday. Wage inflation in the UK still around 5%. Now, that is not 3%, that is not 2%. It's still too sticky. So the labour market yesterday, gave sterling a boost because the market thought, it's still too much wage inflation there potentially for the Bank of England to go again in November. So November is still very much, undecided. It's not as definite as perhaps it would appear just a week or so ago. But what's also going to happen into the autumn is the budget, and that's going to draw attention straight back into the difficult fiscal position that the UK has, and I think also to the difficult growth position that the UK has. And I think those sort of negative sentiments around the budget and the likelihood of tax hikes and the impact of that on growth potential could actually knock some of the more bullish sentiment in sterling that we've seen over the past week.
Yeah, and we don't have a date for a budget yet, so it'd actually be delayed, so maybe the overhang will last even longer than we think. Nicolai, that means, is there anything else that we're watching? I want to ask Jane, of course, about renminbi in China, but is there a UK equities play, or are they just too international?
Well, in the UK, it's a bit of a strange market. You see, the domestic stocks are still kind of spooking investors just because we don't know about taxes, what's the government going to do by the end of the year, and people don't want that exposure at the minute. So they're kind of avoiding them. As for the international stocks, the FTSE 100, which generates like 3/4 of its revenues outside the UK. It's all about how the sterling is going to move. So it's all about how the Bank of England is doing, how the tariff are going to impact. Those stocks are still super cheap. They're still paying hefty dividends. So for the cohort of investors that are focused on like income and value stocks, well, the UK is still a market to go to.
We also have, it's Jane's world translating into equities. Jane, what happens to renminbi right now? Many questions about Evergrande, but also just tariffs, question mark.
Yeah, and I think in the first part of the year, people saw some better data in terms of GDP for China, and that was like, that's encouraging. But there is also a lot of pessimism about some of that fading during the second part of this year. So, for instance, the fiscal stimulus could fade, and we could have more sort of trade issues. I mean, we know that China's got an awful lot of issues with respect to overcapacity, really, within the economy. And if we do see a slowdown in growth coming through, for Q3, for instance, then I think the renminbi, could be hit a little bit. But move into next year, maybe a little bit firmer. But then that is also probably on the assumption that the dollar might weaken again if the Fed turns dovish.
And am I right in thinking you're also looking at Brazil basically as is it a dollar play, but also more domestic concerns?
It's sort of both. There's a massive tariff clearly on Brazil, and although I think exports with the US are something like 12% of the total. There could still be a negative playback into the Brazilian economy, and also what is certainly worrying our Brazilian strategists there is the impact that could potentially have on FDI. So US FDI into Brazil is important. If that is somehow effective by the sentiment between the two countries, then that could have a negative impact on the value of the currency in Brazil too.
Great. We've gone around the world in like 10 minutes, so thank you both for joining us. Jane Foley, Head of FX Strategy at Rabobank, and Mikhail Msik, Equity Market Senior Strategist for EMEA. Now, coming up, Volodymyr Zelenskiy says Ukraine will not cede the eastern region of Donbas to Russia as he prepares for talks with Donald Trump and European leaders today. We'll look ahead to that next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks hit a record after U.S. inflation data fuels bets on a Fed cut next month. The Treasury Secretary says 50 basis points should be in play. Treasury Secretary Scott Bessent rules out the possibility that Chinese investment in the U.S. could be part of any trade deal. Plus, Ukraine's president says he will not give the eastern region of Donbas to Russia as Donald Trump and Vladimir Putin prepare to meet on Friday. Now, J.D. Vance is reportedly set to meet with Nigel Farage, the leader of Britain's Reform UK party. The Financial Times says the meeting will take place while the U.S. vice president is in the country this week on a summer break. Well, we're now joined by Lizzie Burden, our UK correspondent. Lizzie, thank you for joining us. So why is J.D. Vance actually meeting Farage?
Well, like his boss, he's not the only one who mixes business with pleasure. He's renting this 18th century Georgian manor in the Cotswolds. And, of course, it's not natural for the Vice President to meet with the Prime Minister. Donald Trump already did that when he was at Turnberry. He met with Keir Starmer. And now you've had Vance already meeting David Lammy, the Foreign Secretary, at Chevening. And he's shown this curiosity about Nigel Farage, the Reform UK leader. We heard that he was asking Peter Mandelson, the UK ambassador to Washington, about him. So clearly, not only are their politics aligned, but he's also curious about his position in the polls as well.
I mean, it's interesting that he's not meeting the Conservative leader.
It is. Well, Kemi Badenoch's team and JD Vance's team say that it was just a diary clash. But, of course, the tongues are waggling in Westminster. What's going on here? Because you've seen Vance meeting with Robert Jenrick, the Shadow Justice Secretary, and he's believed to still have leadership ambitions. You may think that it's because Vance is looking at the next generation of leader, because he himself sees himself as the successor to Donald Trump. So whether that's Jenrick or whether that's Farage, it seems that he's putting these bonds in place early.
Lizzie, thanks so much. Lizzie Burton there, our UK correspondent with the very latest, of course, on JD Vance meeting Nigel Farage. Now, earlier this week, Norway's $1.9 trillion sovereign wealth fund divested from 11 Israeli companies and terminated all contracts with external managers in Israel. The chief executive, Nicolai Tangen, told us the fund is continuously evaluating ethical aspects of its investments.
It's important for us not to be political. We are an investment fund. We have one overriding goal, and it is to make money, of course, within the mandate we have from the ministry. Now, we divested from these Israeli companies, not because they were Israeli, but in this case, because we wanted to simplify the portfolio management we did in Israel. So these were companies which were not in the index, and we decided to take home the asset management. We discontinued 3 external relationships with external managers, and then we decided to do it ourselves, just to kind of simplify what we are doing and how we deal with this.
Are you evaluating at all changes to some of your responsible investment strategy as part of this, Nicolai?
Well, we are continuously evaluating this. We also have a separate entity called the Council of Ethics, which is looking into more, ethical aspects of our investments. And then in terms of being invested in Israel, that's a political question. It's not a decision that we do. So what we do is to make sure that we invest in Israel in a responsible way.
Well, the Norges Bank Investment Management Chief Executive Officer Nicolai Tangen, they're speaking with Danny Berger. Now, Bloomberg understands that Ukraine's Volodymyr Zelenskiy is traveling to Berlin to take part in video conference talks with President Trump and European leaders today. Those talks come ahead of the U.S.-Russia summit on Friday in Alaska. We're now joined by Greg Sullivan, our Russia editor. Greg, thank you for joining us. The Ukrainian leader has made his position very clear to Donald Trump and Vladimir Putin. He's not giving up control of Donbas.
Yes, those very important comments from Zelensky here. They're not new comments. He has repeatedly said that Ukraine cannot cede its territory or its sovereignty to Russia, but they are very important coming because he will not be at the table for that summit on Friday in Alaska. Instead, it will be just Trump and Putin, and Zelensky obviously worries that they will come to some agreement that he will not be able to accept. So he's trying to telegraph to Trump that this is a red line. But again, it's not new, partly because Russia is trying to take this territory. It would be very unpopular with people at home, but also it would be a bad look. Russia has not been able to take the entirety of the territory militarily, so it would be essentially conceding a victory to the aggressor in this war that they have not been able to achieve yet.
So, Greg, what are we expecting from today's meeting between Trump, the EU, and Volodymyr Zelensky?
Again, this is an important meeting for European leaders and Ukraine because they are not going to be at the table. Europe does see the war in Ukraine as part of its own security concerns, and they want to make clear to Trump that there are certain red lines that they cannot agree to. Europe's nightmare scenario would be that Trump and Putin agree to some framework for a deal that is totally unpalatable to Kyiv, let alone Europe, and that puts them in the awkward position of having to say no to Trump and risking his ire, which of course would raise questions about U.S.'s continued engagement in supporting Ukraine Ukraine has relied on the U.S. support, but also the U.S.'s continued engagement in NATO. So to avoid that potential scenario, they're trying to telegraph to President Trump what they see as red lines, as well as encourage him to ratchet pressure on to Russia to come to a ceasefire before any real negotiations can agree to, and also to raise the issue of security guarantees with Ukraine, which we have not heard a lot about from the White House so far.
Greg, will anything actually come out of the Alaska summit?
So the White House and other senior officials such as Secretary of State Marco Rubio have sort of tamped down expectations. President Trump himself has said that he's willing to walk away with no deal if he doesn't think a good deal can be reached. He's called this a feel-out summit. He wants to test the boundaries of what could be possible, feel out where a potential alignment with Putin could be or what potential deal is there. Obviously, the Kremlin has signaled that there is potentially room for deal-making with the White House, with the foreign envoy Steve Witkoff. But it's also clear that the White House is having this meeting. They'd like to walk away with some sort of tangible deliverable from this, whether that's a framework for a potential future agreement or even potential future talks or an agreement to keep talking. There will be some effort to try to get to something. Now, again, whether that's palpable to Ukraine and its European allies, that remains to be seen. As does whether they get to any deal at all. That will have to wait for Friday.
Greg, thanks so much. Greg Sullivan there, our Russia editor. Now, coming up, we'll get more on Ukraine with Tinatin Akhvlediani, research fellow at the Center for European Policy Studies. That's next, and this is Bloomberg. Well, Ukraine's president says he will not give the eastern region of Donbas to Russia as Donald Trump and Vladimir Putin prepare to meet on Friday. We're now joined by Tinatin Akhvlediani, research fellow at the Center for European Policy Studies. Tina, thank you for joining us. What do you think will happen at the meeting in Alaska on Friday?
I mean, this is a very big question. I don't think anybody really knows about it. What we for sure know that we can hardly call these a ceasefire talks, because for the ceasefire talks that we have to have at the table both parties engaged at the war. Currently, Ukraine is definitely not invited, and these ceasefire cannot be discussed without Ukraine at the table. So, as a matter of fact, this will be simply a bilateral meeting between the President Trump and President Putin, and this already comes across as a concession to President Putin, because that's exactly what Putin wanted, to get attention of President Trump and to potentially also delay the sanction threats that President Trump was actually putting on him just a few days ago. And also what we know is that whatever these talks will discuss, we know that this will definitely shape European security architecture. And for this reason, another thing that weakens the credibility of this meeting is that Europe, again, is not invited to be at the table. European Union is not invited to be the part of these talks, which again weakens the credibility of this bilateral meeting.
Yeah, Tina, I mean, I guess the fact that they're actually meeting today, we also understand that, President Zelenskiy is actually going to Germany to take part in these talks with Donald Trump. Does that give it some kind of legitimacy? I mean, is this just trying to lobby, President Trump not to do anything stupid?
It's definitely an attempt, an endeavor of such, but President Zelenskiy is still not invited in talks with President Putin, right? And these things are just evolving as we speak. These calls, these are online meetings, while the meeting between the President Trump and President Putin will take place actually in person. But it's very, very good that, of course, the EU leaders and President Zelenskiy is, really trying their best to show the leadership, to really, enlighten President Trump's approach to this, that, we should not really West should not be giving political win to President Putin, but rather it should be a coordinated approach to convince President Trump that the forces can be united in the interest of United States, in the interest of the foreign policy that has been historically formed for the United States and American people, not in the interest of President Putin. So far, what we see is that President Trump is really playing the game of President Putin, not of himself.
Tina, is Europe standing strong? Are they standing united, or is there a risk of fracture?
I mean, the risk of fracture is already happening because we saw the communiqué that was released yesterday after the meeting of the leaders that took place on Monday. And we saw that Hungary didn't wish to be associated with this joint letter, although the letter basically stressed the very important messages. This is the way European Union sees any talks to shape or any talks to be discussed when it comes to the ceasefire or European security architecture, but already seeing internal divisions, which is not new. Hungary has not been backing up the joint common EU opinion when it comes to the common foreign and security policy, so this was not unexpected, although other 26 countries are standing strong together, and also this time we're going beyond the European Union, right? Because the European Union is not the security union, not yet at least for now, it's also like forming this coalition of the willing, which is a wider sense of Europe and the like-minded countries, and we have in mind here UK, we have Canada, we have Norway and other like-minded countries who are sharing the position how European security architecture should be shaped, and also how should we treat the violations of the international law, which Russia has done now far too many times.
Tina, do we have an idea of what the relationship between President Zelensky and President Trump is like? We all remember the humiliation that he faced in the White House. How important is it that the two get along now? And actually, is it counterproductive for President Zelensky to say he won't give anything up before Alaska?
No, I don't think it's counterproductive. I think what President Zelensky has been showing is really a good leadership, because he had the same consistent messages, unlike President Trump, that, you know, he is aspiring for the lasting peace. And the lasting here is really the key word, because we've seen Russia signing a lot of ceasefire deals, which Russia has then violated in a matter of hours and days. And we have a long history of that. And of course, Ukrainians, President Zelensky knows it. And of course, he wants to avoid such a situation when talks happen for talks in a Russian style without any conclusion that can be credible, or there is a ceasefire deal which can never be implemented at the first place. So he shows here the leadership. He, of course, shows what the Ukrainians want, because he represents 40 million people, right? We're talking about the country that has been fighting for the democracy, for their choice, for their European choice. Of course, President Zelensky has to voice what the people want and has to show the leadership. And I think this is really not a counterproductive, because, as I said, the fact that this meeting is taking place is already a concession to President Putin. So something has to be done. And here is the European Union, Ukraine, and of course like-minded countries have to show their very strong position and their leadership.
You know, why Alaska? I mean, this is U.S. soil. It's one of the questions that we had. It seems like, again, a big win for President Putin to show up on U.S. soil.
Yeah, this is a US soil, but it's also like showing that these countries are still neighbors. This is, you know, showing that, hey, this is very much Putin's line, right? We have things in common. We are here, you know, two more or less like-minded strong men, strong two white men. We are sharing, you know, the land. We are very close to each other. And yeah, why don't we just focus on the common interest rather than divisions? Except historically, United States and the Russia-backed and Soviet Union have really diverged on many values, right, and many interests. So this is another tweak or a trick that President Putin wants to, you know, trick President Trump into.
Tina, thank you so much for joining us. Tinatin Akhvlediani, there's research fellow at the Center for European Policy Studies. Now, a European rocket critical to the continent's goal of reducing its resilience or reliance on Elon Musk's SpaceX has launched successfully. The Ariane 6, which had its debut in July 2024 and is the centerpiece of Europe's space ambitions, lifted off from French Guiana yesterday. The rocket deployed an Airbus-made satellite into a polar orbit for weather forecasting and climate monitoring. Now, the Danish wind turbine maker Vestas says it's sticking to its full-year earnings guidance as the company navigates tariff impacts and shifting energy policies. The company is a major supplier to the U.S., where President Donald Trump has cut support for renewables. Despite this, the company's chief executive has said that the company sees good order momentum in Europe, the Middle East, and Africa. While Europe's renewables output has boomed in recent years to help meet climate goals, but investments in battery storage have struggled. The problem is that storing electricity and selling when prices are high is much harder than other commodities. Now, a growing number of commodity merchants have started investing in utility-scale batteries, seeking profit from extreme volatility in European power markets. Now, for more, we're joined by Will Mathis, our energy and climate reporter. Will, thank you for joining us. So why are batteries interesting for traders?
Because this is an incredible opportunity to access volatility. The electricity market is probably the world's most volatile commodities market. You see in a pretty normal basis, in the middle of the day, we have prices going very low, zero or even negative, and then just a few hours later, they can go up to 200 euros a megawatt hour or higher, because you've got too much production in the middle of the day, and right now, no way to store it. And then in the evening, you've got a lot of demand. People are, turning on their ovens to cook in the evening, watching TV, and you need more supply. So these commodities traders see an opportunity to store power when it's cheap, or even get paid to store the power and then sell it at a high price later.
So, well, why are the investments happening now?
For one, the price of batteries has come down so much that it's become more economical to do this. And Europe has seen just a tremendous expansion of solar power in recent years, especially a few years ago we had the energy crisis, gas prices were really high, solar panel prices were coming down, and investment happened way faster than anyone was predicting, and now there's so much supply, and so that arbitrage opportunity has gotten really good, and so people who saw this coming a few years ago are well placed to actually take advantage of the trade now.
Well, thanks so much for joining us, Will Mathis, there, our energy and climate reporter. Now, President Donald Trump says he's considering a lawsuit against the Fed chair, Jay Powell, over cost overruns in the central bank's headquarter renovation. In a Truth Social post, he called Powell's handling of the project incompetent and damaging to the economy. And President Trump's pick to lead the Bureau of Labor Statistics recently suggested suspending the monthly jobs report and publishing only quarterly numbers. While speaking with Fox News last week, E.J. Antony said the Fed could not conduct monetary policy when the monthly report was unreliable and misleading. The White House confirmed Antony had floated the idea of a suspension, but says it still expects to get a monthly report. Now, Singapore is set to sell an eye-watering variety of luxury items confiscated from money launderers who were convicted in the country's biggest laundering case. Well, Deloitte will manage the process of selling the non-cash assets after police handed over more than 460 pieces of luxury goods and 58 gold bars. Now, the proceeds from the sale of the seized assets are to be put in a de facto bank account of the Singapore government. Well, that's a story you don't read every day. Now, AI stocks have driven markets higher, even as other sectors grapple with tariff concerns. But CoreWeave shows that rally has limits too. The company, which leases computing power to AI firms, has posted a more than 20-fold jump in losses in its second quarter earnings. Well, Ed Ludlow, co-host of Bloomberg Technology, now joins us. Ed, thank you for being here and welcome to London. Again, large capital spending is one of the hallmarks, of course, of these big bets in AI. Why have CoreWeave's results concerned investors?
Yeah, I don't know that it's a panic. I mean, it's a stock that was up astronomically over 2 weeks just before earnings. And, there's a specificity of what CoreWeave does, right? It builds data centers that handle very specific AI functions, largely inference for people we care about, like OpenAI and Microsoft. And they're trying to keep up with demand, but to do that, they've got to spend. And something that we talk about a lot less than we should probably is that we've been obsessed with capital expenditures figures, absolutely obsessed with them, because we see them as a signal that the AI build-out has legs. It will keep going. But one thing that's happened in raising capex for names like CoreWeave and the hyperscalers and Meta as well is it's just more expensive to build data centers now. Supply chain has made that complicated, particularly with China. And so, they're basically saying we're going to spend our way to growth. They're showing top-line growth as well, but it's a little bit much at the moment for the market.
Ed, how do you read? I mean, this is a wider race, right? Of trying to build data centers and to get on top of it. I mean, again, what's the bigger read into this?
Yeah, because of how much capital it takes to build a data center and how long it takes to build one, you have to commit to that in advance. A year is a pretty good time frame. The difference with CoreWeave is that we call it a neo cloud. It's not just a big old data center in the middle of nowhere in the United States somewhere, like the hyperscalers have that does general computing. It handles training and inference workloads. To date, a lot of their early success has been on the training part. But what happens if that goes away and a lot more AI companies are running inference? They're running the models that they've spent all this time in capital training. There isn't yet the firm evidence that CoreWeave's there yet in that market. Luckily, I'm going to speak to the CEO in a few hours' time. I'm going to ask him.
That's exciting.
Can you kind of solve that one for the market, this transition point? But right now, it doesn't matter where you look. The investment cycle has a staying power that, in my brief career, I've never seen anything like it.
Yeah, and I guess, I mean, the bigger point to everything you're saying is that we don't really know who the winners are yet of AI, right? So this is changing all the time.
No, other than, Microsoft, Alphabet, the parent of Google, and Meta showed astonishing AI-specific revenue growth in the most recent quarter.
Yeah.
Amazon did not show that specific top-line growth contribution from AI, and the market punished them for it. That's kind of where we're at, but we're increasingly, of course, interested in the private companies.
Right.
And OpenAI's data, which is not revenue necessarily, it's user base. They're up there too.
Yeah, and then we can have a whole conversation about China and the fact that they're only 3 to 6 months behind, whereas I think a couple of years ago, the lagging between Western AI companies and China was so much difference. Okay, the other story we're watching out for is, of course, Perplexity making this massive big bid for Chrome.
Yeah, if your viewers and audience want some light relief this August, go on social media and look at my face when I read the news out on the show yesterday. It's a surprise. It's a bit audacious. Speaking to sources, I'm pretty confident Perplexity doesn't have $34.5 billion, but the idea is that they would get investor commitments. It's in the context of a DOJ antitrust situation in the courts, and on the basis that Google would be forced to sell Chrome and the underlying code base, which we just don't know.
There's a lot of talk. I mean, Tencent is coming out, saying that it's crediting a lot of the growth in games and AI, which is leading to a profit beat. What can you tell us about Tencent?
Yeah, so don't underestimate how big Tencent is in the games market as a developer, as a publisher. But the read across of AI is your development costs come down a lot. You get more profitable making video games. GPUs that go into data centers for training AI models, they have their origin in the video games industry. They go into computers that develop video games, and they're just getting better at that. Also it makes for better games, which drives engagement. Tencent also weren't explicit, but it's a much friendlier environment in China right now. Remember that the government, for largely cultural and socio-economic reasons, heavily restricted the video games industry. That's not happening, and Tencent's had several quarters of momentum based on that, off the back of it.
I mean, does a company like Tencent, can they actually sell freely their games to the West?
Well, some good examples of Wukong is a good example of a Chinese game I've played a lot. Yes, remember that the way the video games industry largely works is you have a parent that owns a portfolio of studios. Those studios are all over the place. Tencent has quite a large footprint in Silicon Valley, where I live. The short answer is yes. That's a different story, though. Does Tencent have a competitive title that's sold into Western markets? Hit and miss, yeah.
Okay, interesting. And thank you so much, Ed Ludlow, their co-host of Bloomberg Tech, who's also interviewing the CoreWeave CEO a little bit later today. You can catch that interview on Bloomberg Tech. Now, a couple of things we're watching out for today in the Daybook, 12 p.m. UK time. This is NBA mortgage applications, and we have U.S. oil inventories at 3:30 p.m. We did have a report from the IEA talking about peak oil and the dynamics in oil as we're looking for a little bit of subdued growth across the globe. Then 6:30 p.m. UK BOC, summary of deliberations, and then we do have a lot of Fed speakers. The Fed's barking, repeating some remarks on the economy, and then we also have Goolsbee speaking a little bit later on at a luncheon. Now, the interview, also not to miss, is the one with the U.S. Treasury Secretary Scott Bessent. This will be extremely interesting, especially after yesterday he said the Fed should go for a 50 basis point cut in September. I haven't heard a Treasury Secretary before this one really weigh in without any concern about independence as we have now. He joins Surveillance later today at 12:30 p.m. UK time. Up next, Bloomberg Brief. A lot of the focus will be on global stocks, again, extending their rally fueled by mounting expectations of Fed interest rate cuts, and this is continuing to lift global equity markets and pushing bond yields lower. Equity markets rallying as so far modest rises in inflation bets mean that the Fed could resume rate cuts next month, but also move more aggressively to protect the labor market, showing signs of strain. This is Bloomberg.